All right, let's take a look at the SFU bookstore's income statement here. The first thing I'd like to point out is up here, you see the three lines. That's the correct format for any financial statement. So you want to start off with the title of the SFU bookstore. So the company name or business name, that goes at the very top. And then on the second line, you put down what the financial statement is. In this case, it's income statement expressed in thousands of dollars. And the third line is the date or the range which the financial statement covers. In this case, it's an income statement which covers a period of time because we're reporting on how the company did over 1 month, 1 quarter, or 1 year. So this is an annual income statement. So we have the year ended December 31st, 2019, and also the year ended December 31st, 2018. So let's start off over on the 2018 side and see what's going on here. So if you look over here at the top, we have our revenues. This is money that comes into the business that you can say the business earns. So remember, it's expressed in thousands. So we have 5.2 million in sales and we have 2.2 million in service revenue. When you add those together, you get total revenues. So that's pretty straightforward. Adding those two numbers together gives you total revenues. So let's go ahead and do that for the 2019 year. We have 6,700 or 6.725 million in sales revenue and then 2.535 million in service revenue. So that's total revenues of 9,260. Right? So scrolling down a little bit here, we can have a look at expenses. So this is typically what we would expect from a bookstore. A major expense will be books and office supplies, the stuff that we sell. Right? Those are cost of goods sold. And then we also have salary expense. So we have people who work there. We have cashiers. We have salespeople for books. And we have IT personnel who help repair the laptops. So salary expense is another major expense. Utilities, we have to pay for heat, electricity, water, as we mentioned. We also pay rent to SFU. And we have something called amortization. So what amortization is, it's expensing capital assets or big assets over time. When you buy something, you don't expense it right away. You expense it as you use it over the course of probably several years. So as we go down the expense list, we have one tally row at the bottom. It says total operating expenses over here. What we've done in 2018, we've gone straight down, we've added everything up. So we do the same thing for 2019. Just go straight down these rows, add everything up, and we end up with $8.26 million. So the next step here is filling in a row called operating profit. So the way this one works is We take our total revenues, take off our total operating expenses, and we're left with a number, which is hopefully positive. What it means is we've made an operating profit. So the two numbers we've written in, we're going to subtract them from each other, 9260 minus 8260, and we're going to get $1,000 in operating profit. Then we have something called interest expense. So the reason why this interest expense is outside the other expenses is because it's not necessarily tied in exactly with operations. So a lot of times operating profit, you will see it being called something like earning before interest and taxes, or EBIT. So the interest and taxes are not strictly part of operations, so we present them separately outside of operating revenues and operating expenses. So in this case, our interest expense is actually less than last year. Last year was 240, and if you look at what was done, we took 760 minus 240, we got net income before taxes of 520. So we'll do the same thing here. We'll go 1,000 minus 150, and we'll get 850. So it's actually expressed in thousands, so that's 850,000. And last but not least, we have income tax expense. So when you make a profit, you generally have to pay money to the government. Last year, we paid 70 or 70,000 to end up with a net income of 450. This year, we'll pay 100. So 850 minus 100 will give us net income of 750. So a couple things here before we move on. You'll see that there is a dollar sign at the bottom and a double underline. That's standard accounting practice. If you have negative numbers, they're expressed in brackets, as we saw earlier. We also have a dollar sign on each of the columns at the top. So that's good practice. Put a dollar sign at the top, put a dollar sign at the bottom, and double underline your final number.